What if I told you? The American dream wasn't destroyed overnight. It was slowly priced out of reach. For decades, buying a home was the symbol of success. Work hard, save money, buy a house, raise a family, build wealth. But today, millions of Americans are asking the same painful question. How can anyone afford a home anymore? Prices are high. Mortgage payments are crushing. Rent keeps rising. Insurance is expensive. And even people with good jobs feel stuck. The dream is still there, but for many people, it feels impossible to reach. A home used to be a place of security. Now, for many people, it feels like a financial trap. Young Americans are delaying marriage, delaying children, delaying independence, delaying wealth. Not because they don't work hard, but because the cost of housing has moved faster than their income. And the scariest part is this: the people who already own property are building wealth, while the people trying to enter the market are falling further behind. This is not just a housing problem, it is a wealth problem. It is a generational problem, and it may be one of the biggest financial traps in modern America. Welcome to NextGenFinance, where we break down money, business, the economy, and financial psychology in the simplest way possible. Today, we're uncovering why Americans can't afford homes anymore. And by the end of this video, you'll understand the real reasons behind the housing crisis. Why rent keeps rising, why buying feels impossible, and how this housing trap keeps millions of Americans financially stuck. For a long time, the American dream followed a simple formula: get a stable job, save for a down payment, buy a home, pay it off slowly, and build wealth over time. For previous generations, this path was realistic for many families. A normal job could support a household. A home was expensive, but not impossible. And once a family bought property, that home often became their biggest asset. It created stability, it created equity, it created generational wealth. But today, that same path feels broken. The job market changed, the cost of living changed, the price of homes changed, and the dream that once felt normal now feels like a luxury. The first major problem is simple: home prices have exploded. In many cities, homes are no longer priced for ordinary workers. They are priced for high earners, investors, dual income households, or people with family help. This creates a painful situation. A person can work full-time, earn a decent salary, save carefully, and still watch home prices move faster than their savings. Imagine trying to save for a down payment. But every year, the house you want becomes more expensive. You save $10,000, but the home price increases by $50,000. You feel like you're moving forward, but the finish line keeps moving away. That is the emotional reality for millions of buyers. They are not standing still. The market is just running faster. But the price of the house is only part of the problem. The real shock comes from the monthly payment. A home can look expensive on paper, but when you add the mortgage payment, it becomes terrifying, because buyers don't just pay the home price. They pay interest, they pay taxes, they pay insurance, they pay maintenance. And when interest rates rise, monthly payments can become much higher. This means two people can buy the same house at different times, but pay very different monthly amounts. One buyer gets a lower payment, another buyer gets crushed by higher rates. That's why many people today look at homes and think, I don't just need a down payment, I need a miracle. The home may be listed for sale, but the monthly payment decides whether it's truly affordable. Now here's the trap. If you can't buy a home, you usually rent. But rent has also become expensive, so people are stuck in a loop. They want to save for a home, but rent takes a huge part of their income. Because rent is high, they save slowly. Because they save slowly, they can't buy. Because they can't buy, they keep renting. And because they keep renting, they keep paying someone else's mortgage. This is one of the most frustrating parts of the housing crisis. Renters are paying every month, but they are not building ownership. They are not building equity. Their money disappears. Meanwhile, property owners receive income and often build wealth. That is how housing creates a wealth gap. Owners move forward, renters struggle to catch up. Another major obstacle is the down payment. Many people think, I just need to save enough money. But saving today is harder than it sounds. Rent is high, food is high, gas is high, insurance is high. Student loans exist, car payments exist, credit card debt exists, so even responsible people struggle to save large amounts. And while they're trying to save, home prices may continue rising. This creates financial exhaustion. People feel like they're sacrificing, but still not getting closer. They stop eating out, cancel subscriptions, work extra hours, try side hustles. But the down payment goal still feels far away. That's why the housing market feels unfair to many young Americans. It rewards people who already have money and punishes people who are trying to start from zero. Now let's talk about something many buyers are angry about: investors. In some areas, regular families are not just competing with other families. They are competing with investors, people with cash, companies with capital, landlords buying multiple properties, short-term rental owners, investment groups. And when investors enter the market, they can move faster than normal buyers. They can make cash offers. They can buy homes quickly. They can renovate and rent them out. For a regular family trying to buy their first home, this feels impossible. They find a house. They make an offer. Then someone else comes in with more money or cash and wins. This is one reason many people feel locked out of homeownership. The market doesn't feel like a place to find shelter anymore. It feels like a competition for assets, and people with more money usually win. Another big reason homes are unaffordable is supply. In simple words, there are not enough affordable homes where people need them when demand is high and supply is low. Prices rise. It's basic economics. But housing supply is complicated. Building new homes takes time. Land is expensive. Construction costs are high. Permits can be slow. Zoning rules can limit what gets built. And many builders prefer constructing more expensive homes because profit margins are better. So the market gets more luxury housing, but not enough affordable housing. This creates pressure on buyers and renters. Everyone competes for limited options, and when competition increases, prices go up. That is why solving the housing crisis is not simple. It's not just about people needing better jobs, it's also about the number of homes available. Even if someone manages to buy a house, the costs do not stop. Home ownership comes with hidden expenses: property taxes, home insurance, repairs, maintenance, utilities, HOA fees in some places, and in some areas, insurance costs have become a major burden. Weather risks, natural disasters, rising repair costs, higher replacement costs. All of this affects insurance pricing. So a homeowner may think they can afford the mortgage, but then taxes and insurance increase. Suddenly the monthly payment becomes painful. This is why buying a home is not just about qualifying for a loan, it's about surviving the full cost of ownership. A house can make you wealthier over time, but only if the payments don't destroy your monthly life. For many young Americans, the problem begins before they even try to buy a house. They already have debt, student loans, credit cards, car payments, personal loans. Debt affects home buying in two ways. First, it reduces how much money people can save. Second, it affects how much mortgage they can qualify for. Lenders look at debt-to-income ratio. That means if a big part of your income already goes to debt, the bank may decide you cannot afford a large mortgage, so debt becomes a wall. People may have good jobs, they may earn decent money, but past financial obligations block future ownership. This is how debt delays the American dream. Not for months, sometimes for years. At the center of this crisis is one painful truth. Housing costs move faster than wages. Many people are working hard, but their income has not kept up with the cost of buying a home. This creates a feeling of failure. People think, maybe I'm not doing enough. But sometimes the problem is bigger than the individual. If homes rise faster than paychecks, even disciplined workers struggle. If rent takes too much income, even responsible renters struggle. If inflation increases daily costs, even savers struggle. This is why the housing crisis feels so emotional. People are doing what they were told to do. Work hard, get educated, save money, be responsible. But the reward is harder to reach than it used to be. Housing is not just shelter. It is one of the biggest wealth-building tools in America. When homeowners make payments, they can build equity. When property values rise, their net worth can increase. When renters make payments, they receive a place to live, but they usually don't build ownership. This creates a long-term wealth gap. The person who owns a home may become wealthier simply because their asset rises in value. The person renting may be working just as hard, but not building the same equity. Over decades, this difference becomes huge. That's why the housing crisis is not only about buying a house, it's about who gets to build wealth and who gets left behind. This is why so many young Americans feel hopeless. They look at home prices and feel defeated. They look at rent and feel trapped. They look at wages and feel stuck. They see older generations who bought homes earlier and wonder if they missed their chance. This creates emotional pressure, anxiety, frustration, anger, and sometimes shame. But the truth is, many people are not failing. They are facing a very different economy. The rules changed. The numbers changed. The cost of entry changed. And the old advice doesn't always work the same way anymore. Just save more is not always enough. Just work harder is not always enough. The system became more expensive. So what can people actually do? There is no magic answer, but there are smart moves. First, understand the real cost of home ownership, not just the mortgage, taxes, insurance, repairs, emergency costs. Second, avoid buying too much house. A home should build your future, not destroy your monthly peace. Third, reduce high-interest debt. Debt makes it harder to qualify and harder to save. Fourth, increase income through skills. In a difficult housing market, income growth matters. Fifth, consider location carefully. Sometimes the dream home may require a different city or a different strategy. Sixth, invest even before buying a home, because home ownership is not the only path to wealth. Stocks, retirement accounts, business skills, side income. All of these can help build financial strength. The goal is not just to own a house, the goal is to build freedom. So why can't Americans afford homes anymore? Because the problem is not one thing, it's everything at once. Home prices rose, mortgage payments rose, rent rose, insurance rose, taxes rose, debt increased, wages struggled to keep up, investors entered the market, affordable supply stayed limited, and millions of people got caught in the middle. This is why the American dream feels different now. It's not gone for everyone, but it is harder, more expensive, more competitive, and more emotionally exhausting. But understanding the problem is the first step. Because when you understand the trap, you can make better decisions. You can avoid bad debt, build stronger income, invest wisely, think long-term, and stop comparing your financial journey to a version of the American dream that may no longer exist in the same way. The world changed, so the strategy must change too. If this video opened your eyes, subscribe to NextGenFinance for more powerful videos about money, business, the economy, and financial psychology. And remember, a home should be a path to freedom, not a prison made of payments.